Relay company acquired a non-current asset on 1st October 2019, 10 years before 19. Supposed and they acquired this thing at a cost of 100,000. Okay. Let me fix the number format. Financial. All right. So it acquired for 100,000, which had a useful life of 10 years. Life is 10 years. All right. And a nil residual value. The asset had been correctly depreciated up to 30th September 2014. All right. So by this time, what will be the carrying value then? Because 10 million, 10 years. So every year they are doing 10,000. And from 9 to 10, 11, 12, 13, 14. So 5 years. That means 50,000. They have already, you know, taken the depreciation. Now the carrying amount is 50,000, right? Because for each year, how much will be the depreciation? 10,000. And 2009 to 14 for 5 years, how much they might have done? 5. So how much is left now? 100,000 minus this 50,000. 50,000. Okay. Okay. At that date, the asset was damaged. Okay. And an impairment review was performed. All right. On 30th September 14th, the fair value of the asset less cost of disposal was 30,000. Okay. So on this date only, fair value less cost of disposal is 30,000. And the expected future cash flows means value in use on this date only is hmm, 8,500 per annum for the next 5 years. Wow. So, I mean, then we need to calculate this value in use in this case. So, we have years one, 2, 3, 4, 5. So, there will be 5 years. Every year we will be getting this amount, 8,500. But then they are also saying that the cost of capital is 10%. Okay. And a 5 year annuity of 1 per annum at 10% would have a present value of 3.79. Oh, that is given. So 8,500 multiplied by 3.79. Okay, okay. So we don't need to do all of this. This is given already. So value in use, we will just multiply by the present value factor. So we have 32. So whichever is greater, fair value, COD or this. So this 32215 is greater and carrying value is 50,000. So what will be our impairment on this date? That's they are asking. Impairment will be the carrying value minus this greater of these two, and this one is greater, so we'll take this. So 17,785 should be our answer here. All right, we will do question number 45 now. Okay, the net assets of F company, a cash generating unit, are. So the net assets are given here. All right, PPE allocated goodwill. We are doing question number 45. Maybe we need to write everything down here. We have PP&E of 200,000. We have goodwill of 50,000. We have patent of 20,000, and we have net current assets of 30,000. Okay, and the sum is 300,000. All right. An impairment review was carried out following adverse publicity received. The impairment review indicates that if company has a recoverable amount, so they have this recoverable amount. How much is it? 200,000. Okay. PB&E, goodwill, patent, net current assets. Now recoverable amount is 200,000. What amount be the carrying amount of F company's PP&E after the allocation of the impairment loss? So how much is the impairment loss total? Total impairment is out of 300, 300 minus 200. 100,000 is the total impairment. First, we will allocate all of goodwill, right? So goodwill is now zero. 50,000 will be the impairment on this. Remaining is 100 and net current assets we will take the zero. This will remain this. So this patent and this PP&E. On these two, we need to allocate the remaining 50,000 because 50,000 is already allocated to goodwill. So the remaining, so out of this 100,000, to total impairment we can say here, you know, total impairment is 100,000 allocated to goodwill. The entire, maybe minus we can use here. The entire, this thing we did goodwill, and then the remaining impairment. Remaining impairment is how much? Remaining impairment is 50,000. This will be allocated to PP&E plus patent. So how much is the sum of these two? PP&E is 200 and patent is 20. So this 50,000 will be allocated to two, I mean this PP&E and this. So we'll do this ratio thing. So we'll take the remaining impairment, divide this by this, and then multiply this by is PP&E. Okay, likewise here also we will take the remaining impairment divided by the sum of these two and multiplied by this. Okay, so we'll remain with this. What is the question? What would be the carrying amount of F company's property, plant, and equipment? So uh, this will be the answer. Okay, 154545. Okay. We'll do question number 46 now. Select whether each of the following statements is an indicator of impairment or is not an this thing of impairment. Okay. So first one is we're doing question number 46. First one is saying advances in the technological environment in which asset is employed has an adverse impact on its future use. Okay, so I mean there is an technological environment I mean there are advances going on. AI is coming, chat GPT is coming, various things are coming. So any kind of technological environment is the, any kind of advances in the tech will be an impairment, will be an indicator of impairment. Okay, so first one is indeed an indicator. Hmm. Second one, an increase in interest rates which increases the discount rate, and so if there is an increase in interest rate, probably our the value in use will get impacted, and that's also an India indicator of impairment. Carrying, so maybe we can write something here. In the first, they are saying like, I mean, tech changes, technological changes, advancement or anything, and interest rate changes. Yes, both of these will have a bearing on the value, and it is it is an indicator of impairment. The carrying amount of an entity's net assets is lower than the entity's number of shares in issue multiplied by its share price. So if the carrying amount of the asset is lower, I mean asset is lower than equity. Okay, that means what? Maybe the assets are overstated and it there is some impairment because equity is lesser. I mean equity is higher, asset is lesser. So that is also an indicator. Okay, if assets is lower than equity. Estimated net realizable value of inventory. Okay. Inventory is current assets, no? So why is it has been reduced due to fire damage? I mean, it's a current asset, so it is not an indicator. It is, I mean, because of fire and something, anything happened. This is not an indicator. Okay. Under IS 36, this is not. So these three you need to remember: take changes, interest rate changes, and if assets is less than equity. Okay. All right.